Okay, the grind higher continues. Not bullish enough to really be tremendously directional, not bearish either at all, and still just maintaining the grind, right? And different things in underneath the surface are making directional moves. And today, what has been these kind of the reflation trade or whatever you want to call it, the XLI and XLB and financials and energy, that segment of the market which have been lagging for the last couple of months, it's making a little bit of a comeback and a little bit of a breakout. In fact, some stocks within those areas are breaking out on their own. The one in particular we're going to trade today for our trade idea. So we're going to talk about what these underlying moves are and what they mean. Are they enough to change things? Are they enough to give us a new leg of risk appetite to actually get a directional move? Will it lead into, do we need a parabolic move to end this run, this very mature run that we've been on, or does it mean that we'll just continue to converge, bullish convergence, but converge, in other words, grind for the next little bit. So we're going to break all that down in today's video. So let's go ahead and get started. Today is Wednesday, August the 11th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the Market Forecast Indicator. You can see another new high, 2 days in a row here. It's not very much of a high, but it is a new high nonetheless. So we continue to move this up. Remember, the more we move that zero line up, the bigger the gap gets between 0 and 23. So. And remember, anything between 0 and 23 is noise. So that's just widening that gap. And you notice we just never have had a dark pink shading and a red line for a while. It's been 9 months, going on now 10 months, because we're almost to the beginning of September. We're through almost to the middle of August. So we're going on about 8.5 months here, or 9.5 months, excuse me, almost to 10. Again, 12 is the high, or 13, excuse me, it's the highest I've seen. Back in the mid-90s, where we've had a stretch where the momentum line, or intermediate line, excuse me, did not get below 40. I mean, just to kind of give you an idea of like what the stretches have been like here lately. So there's a big long. This is typically just 1 to 3 months. There's a big long stretch of it not getting below 40. There was a big long stretch of it not getting below 40. This was a big long stretch of it not getting below 40. So we've been in these kind of abnormally long stretches of not dropping below 40. And the problem is when we do have these abnormally long stretches, and this is one of the longer ones I had previously seen, you can see what happens coming afterwards. So not saying that we're going to tank here, not saying that we'll fall off a cliff tomorrow, but the idea is that we can tank, we can drop, what would be an uncomfortable drop, but it wouldn't be an abnormal drop because of, again, how wide that gap is between 0 and 23. Otherwise, we just keep pushing higher. We're obviously above the moving average. The moving average is well into the upper half of this gap between 0 and 23%. A lot of times when you're just starting, the moving average actually below the 23% level. So to have it so far up above is we've seen this before too here recently. It just shows, again, we can really drop below the 30-day moving average pretty significantly, kind of like what we did over here and kind of like what we did over here, and still not be on an intermediate decline, like again that we have seen on the NASDAQ, and we have seen on that we're currently or had been on the Russell. The intermediate line's making a run. Like today was a really good move. We finished at the high of the day. We still haven't closed up above like this, the long upper shadow there. The top of that's 2256. We're at 2250. We're actually still in the range here and a little bit of a hanging man as well with a long lower shadow. That's not as bearish, but you can see all the lines are pointed higher. The near-term lines jumping back up from being below 50, the momentum line jumping out of oversold territory. So there is some a little bit of a bullish momentum that we have going on right now on the Russell 2000 that we just haven't seen for quite some time. It's a positive development. In fact, when you look at The DMI is still the ADX is still extremely low in the S&P. So there's, I mean, about as non-directional of a move. Even though we are tilted higher, it's still so very like not a directional move at all. But IWM, which had been on a bearish directional move, is looking a little bit better. We are well off of the highs of the peak there. The ADX is back below 20. We are not seeing this. We haven't seen the crossover yet where the positive, the blue crosses above the purple, or the positive directional index crosses above the negatives. That hasn't happened. We haven't had the positive getting below 25 here. With the negative getting below 25 with a positive above 20. That's what ends the bearishness. So we haven't had that yet. We are above 20 on the positive, but we haven't dropped below 25 yet. So, you know, again, that doesn't necessarily, that's not a bullish breakout move. A bullish breakout move is when the positive gets above 30 and the negative gets below 20. But we're not bearish anymore. See, we had this bearish breakout move when the negative got above 30 and the positive got below 20. That started a bearish breakout move. The accordion opened up, and we haven't ended the bearish breakout move yet because the positive is above 20. That's a good sign, but the negative is not below 25 yet. So, but you can see that it looks a little bit better than what we had seen previously. So there's your, you know, RSI and your CCI at bullish levels on the S&P 500. And try at least getting up above 100 and getting above 50. Like, we're not to bullish levels yet here, and definitely not a bullish breakout move yet, but at least we're in the upper halves of this chart, and that hasn't been the case recently. And if you look at the Ichimoku trend cloud, of course, about as strong of a posture as we've seen here. You can see if I were to put my cursor there, if you look back, the April move, this was about as high as the trend quality level got. If you look back in January, it's about as high as the trend quality got. But if you go back to last September when we went parabolic there, you can see that we were well above this figure. Just for a little bit more perspective, if I zoom out to 5 years, here, let me put a line on there so we can follow it along. So I'm going to edit that. I'm going to put it at, where's today's level? 6.7. 6.7. And let's change it to a different color so it stands out. Let's do that one. And then, let's just go a bigger number. There we go. So there you can see, if I zoom out now, you can see there's a few other times here that we were more bullish. Again, when we went parabolic there in September, we were more bullish than this, and when we went parabolic on the Russell, we were more bullish than this, and we finally got, and then there was the pre-COVID move with the divergent high point after that. There was a big, strong move in early 2019 coming off of that fourth quarter 2018 level. That's what we looked like going into the fourth quarter 2018. Preceding that bullish one, there's a big time trend we had when we went parabolic there. We went that's one of the most parabolic markets I've ever seen. All the daily, the weekly, the monthly chart all went parabolic there on the DMI, all at the same time, going into the end of January. So going back out, you can see in early 2017 we were pretty strongly bullish there for quite a period of time. So, you know, again, there's other times where this is kind of the level. There's other times where we've blown right through this. I think the difference on this one versus the other is that this is like the third wave. Look at this. This is like a COVID waves. But since we started this market sentiment or this intermediate rally, you can see the waves. This was the first wave. And then again, the NASDAQ had a pullback, but not the S&P. This is the second wave. Again, the NASDAQ had a pullback here, but not the S&P. And then, of course, here's the third wave of this current run. And none of them see, you know, when you look, what does an intermediate pullback look like? That's what it looks like. You know, we get down below 2, we get above 65, you know, on the negative side of things. That's what the Russell has been doing, right? Or at least has been flirting with it. The Russell had been flirting with it there. We were above, you know, just briefly below -2 and above 65. So we were in below the cloud. That's what an intermediate pullback looks like. And you notice we haven't had one of these and since September, right? Since over here, since that period, it's been 1, 2, 3 waves. So the question is whether or not this will be a wave that really pushes us through to a parabolic finish, kind of like what we've seen previously. Coming over here, see, this is kind of 2 waves without an intermediate decline in the middle. This was one big wave with a divergent high point there coming off of that intermediate low point. You can see one big wave there too. But then here's that, this is the 2019. Again, one big wave in between intermediate declines, as you can see. And I believe, see, that's May going into May. Again, one big, actually kind of a couple waves, little bit of a pause in between. But there is your early part of 2018. See, again, one big tremendous wave higher there. Little bit of a pause, like, a little bit of, that's kind of where it started there. And in fact, if you zoom out and look at this whole level, you notice we never really did get a bearish decline this entire time coming off of this election. From the election November 16, we had one big wave and then kind of some smaller ones, but never really a significant decline, at least strong enough to get this trend noise balance above 65 with a -2 reading. So we never did get one till over here. But you can just see how it's just like, and then we culminated with that move. So we're kind of in this stage right now, right? Going in here again, this entire time with this the only time that we've ever were significantly bearish on this particular indicator was in September when we had our only intermediate pullback. We've been going strong ever since and are in a mature wave right now. So if you look at our Bollinger Bands for SPY, you can again see we're flirting with the top of the value area and pushing up against it. We're pushing up against the upper quartile. Nothing too bullish, but nothing bearish at all either. IWM, on the other hand, had been in the lower half, is now in the upper half, but unable to break through either to the upper quartile and really break out. As you can see, we are flat, like the bandwidth is low. We are set up for a breakout, but you can see what's holding it back. We have to clear this volume node and really push up against that upper band if we're going to break out and really get going on a new risk appetite move that in this case would most likely be led by small cap stock sectors more associated with the small cap index. Take a look at today's move. You can see the gap we had to start the day. We filled in the gap by the middle of the day. We finished at the high. So a good higher high, higher low, closing up above yesterday's high. You can see we're kind of using that for resistance in the middle of the day. But we did close up above yesterday's high, closer towards today's high. So a good bullish candle from that perspective. If you take a look at today's volume, though, and trading range, still very light. It's been very light for the last 5 days. Still in the low 40 million. The trading range 1.25 points. And you put those numbers in context. 1.25 points is way low, and the ATR is already extremely low. The volume at 43 million is also off the charts here when you're looking at the average for the past year. So extremely low volume, extreme. In fact, volatility is actually extremely low too. Is one of the lowest closes that we've had. You notice we've had 4 closes below 80%, and we're significantly below 80%, but we're not below 15, which is what you would expect if we're going to be this low. So it kind of again shows the market's still concerned by keeping VIX up high on an absolute basis relative to where it is on a relative basis. This tells us we should be easily below 15, especially with the ATR is extremely low as it is, and volumes is extremely low. All of that suggests we should easily be below 15, like we were, in 2017, right? The kind of comparable period, easily below 15. But that's not the case right now, because the market still is concerned about the tail risk, especially with the skew up as high as it is relative to where it was over here going into you know, really ended up being a full year's worth of volatility. A little bit of a pause in the middle, but a full year's worth of volatility in 2018 coming out of that. One more chart I want to look at, the long-term view. Again, very, very bullish candles. But what I wanted to show you was the Russell 2000. It's looking more and more bullish, right? It's still not a very good, decent-sized body yet. Here, let me change this. There we go. Use a log scale. So you can see, you know, still not the greatest size candle, but and still a little bit of a lower shadow. But obviously next week, if we were to start here, and we haven't gotten back, but we actually did get above the 50-day moving average. You know, next week's going to be easily a lot more bullish candle, especially if we continue this bullish run. If we actually do break out and we get back up above, you can see SPY so easily above its 8-day moving average. But the key here is IWM still up above its 30, still up above the 17 without breaking back down. So it's been one. Now we didn't break above the 17 and the 30, but we've been above the 17 now for 1, 2, 3, 4, 5 days. The MACD is positive. The histogram's turned back up again. So there's an opportunity here for IWM to break out. It's really gotta, I would say it's got to get above this 224.75 level, probably above 225 to be safe, for us to say, okay, like that's a good bullish sign. We've had this pullback, and now we're starting. The Russell is starting a new intermediate run. And who knows how long that will last, right? The NASDAQ has started multiple intermediate runs since the S&P started its last intermediate run last November. So that kind of gives us an idea of what we're going to be watching for on the Russell, the signal. My opinion, the next risk appetite stage. Until then, we're stuck in grind mode where markets aren't bullish enough to trend to get a directional move, as you saw in the directional movement index, but also not bearish either. So we just grind. We just grind with a tilt to the upside. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here on the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That will notify you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. And number two, it tells us you want us to do another video again tomorrow. Quick way to give us feedback if you like our videos. If you don't like our videos, of course, you don't have to click on anything. You don't even have to watch. But if you do like them and you want to let us know, it goes a long way for us if you get that one click. You can do it right now while you're watching. Also, comment down there. What did you get out of the videos today? What stood out to you? What questions or what comments do you have about anything I discussed in the video today? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out right there in the top right corner of your screen. Click on that link to subscribe to our site for free. Again, we have a unique offer for our free subscribers to check us out. So subscribe there to find out, get that offer. Follow me on Twitter for more content. In between the videos from day to day, there's my handle there at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out these things over here on the right. A Market Outlook live video. I do this at 3:30 Eastern time here on the site. You can get to it by clicking on this, or by coming up here and clicking on Market Outlook Live Trade Review. It is what it says it is. We review all the trades that we've done in previous Market Outlook videos to see whether we should stay in them or get out of them. We also put on today's trade before the market closed. So the trade idea you'll see at the end of the video, we've already placed it before the market closed today. We did it during this live video. This is where you can get to it. Also, our trading room's coming up over here on the right. All of our paid subscribers get access to those videos. Of course, our premium subscribers get access to it for less money. In addition to that, they also get access to our class forums, our premium subscribers only, and then also our premium tools and resources that we have here. Come down to the bottom. That's why most of our clients, probably about 98% of our clients, are premium subscribers as a result. But come down here and click on this heart. It opens up a new tab. Hit that like button right there. Also hit this thumbs up icon, opens up another new tab. Hit that like button as well. Again, the more you do that, it really helps us out. It gets our content out to more people, the more engagements it has. That's why we always ask for it. It also benefits you because Twitter and Facebook promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, now let's go back over here to our how different asset classes perform today. And you can see the Q is still, the big winner over the last 3 months, and small caps coming from behind here, and gold really dropping going into today. But let's just look at today alone, a dramatically different story. So let's come here to this today alone. You can see gold up dramatically and the dollar down significantly. So a big reversal from what we had previously seen. If I were to extend this out to just like the past 5 trading sessions, here, let's go 5 minutes on that. Then you can see that wasn't the case before. The dollar was really significantly bullish going into today, and the gold was really significantly bearish. So when you look at it from this perspective, it kind of puts, okay, maybe gold's not that bullish, right? It's just so extremely low, down 4.5% just in 4 trading sessions, especially coming into the week, to the new last Friday, and then today coming into the new week, kind of holding ground on Tuesday before bouncing. Long-term bonds really taking a little bit of a dip really last Friday, and then just gradually just a smidgen lower. The dollar again up really strongly bullish until today, and down just a little bit, but you can see like the move down today in context is not that much of a downward move. But you can also see the strength in small cap stocks pretty much this entire past week. It's been a risk off move, as you see long-term bonds, gold selling off. The dollar's still bullish, but these two commodities were bullish, and then small cap stock, and even the Qs here, this purple line Qs, were actually bearish over this past week because they're right now considered a safe haven too. Obviously not as safe haven as gold and long-term bonds, but safe haven nonetheless. And your small cap stocks, they're the ones that are your more aggressive. If I were to look at the sectors, you can see similar. You'll see energy and materials and financials kind of doing the same thing. If I were to go to August, and then to August the 5th, so the last 5 trading sessions, again, financials, materials, and energy, industrials, these are all S&P 500 sectors, of course, but these sectors are more associated with small caps, with IWM, and you can see the gains that they've had over the past 5 trading sessions. But interestingly enough, look at utilities and staples, also associated with small caps. You can see how bullish that they've been. So it's not been a completely risk off. In fact, what's been your outperformers lately is real estate, technology, and healthcare. They are just giving back a little bit. If I were to go back out here to a 3-month time frame, they've been the big winners. Healthcare, real estate, technology, XLC a little bit too. They've been doing really well. In fact, if I zoom out a little bit more to a 6-month time frame, you can see financials bouncing back up again, but there's real estate doing well. You can see it's really coming off of that low point is where technology, so from 512 going forward, that's really when technology started to ramp up in terms of outperformance here. Technology, real estate, and healthcare, that's when they all three really ramped up, about 8 to 13% gains, with all these smaller sectors kind of lagging behind with small losses while the market's been bullish. So they're just kind of bouncing up, giving back some of these gains, bouncing up off of these lows. That's just kind of the nature of relative rotation, which I like to show you here on this chart. Let's go back to the sectors. And you can see on the weekly chart, they're still lagging and in the wrong quadrant. Negative momentum, negative relative strength, going in the wrong direction. Energy, financials, materials, industrials. Look at staples down there. And you have XLK, XLY moving up to the right. Real estate kind of rolling over. But on a daily basis, on a shorter time frame, you can see it's the opposite. Energy is going to have a hard time getting above 100 on a relative strength basis, and industrials really isn't moving, but financials and materials are. They're your biggest winners. Utilities, healthcare kind of giving back. If I were to zoom out to about 2 weeks worth of time frame, you can kind of see there's financials, materials, utilities being relatively positive, healthcare rolling over, energy is going to have a hard time get going. Technology is going down to the left, discretionary down to the left. Communication services down to the left. Staples and real estate also moving down to the left. So we've got a cyclical move into these smaller sectors while kind of a smaller short-term cyclical move, while the long-term move still remains bear. I mean, there's the long-term, the weekly for financials. We're still, it's got a relative strength, but it's been lagging behind other sectors. And well, this is EMB here. Let me get to VT or even just SPY and then pull this into SPY as well. There we go. So there is your, dropping your financials on a weekly chart. Yeah, weekly chart here, dropping down. Like obviously we're up to higher highs, but not on a relative strength basis. We're getting lower highs, way lower than this peak, right? This peak, we're actually much higher, but on a relative basis, we've been lagging behind since the beginning of the year. That's why we went down there, or again, beginning of 2020, sorry, and we've been lagging behind there. After this nice little run of relative strength, we've been on a bearish run. And if you look at like materials as well, you can see we're in the red and you're going down with negative momentum. And you look at energy, and again on the weekly chart, you can see we're in the red and we're moving with negative momentum. So that's a red quadrant when they're both below 100 like that. When you look at industrials, moving down, both below 100, both in the red. Even though we're bouncing up, we're still, so on the short-term basis, we're getting a nice little bounce to the upside, some positive momentum, some upward swing here. But on the longer-term basis, we're still rotating out of these areas. So it's not necessarily the big breakout pattern that it's more of just a bounce off of it's oversold levels, trending lower on a relative basis, and we're just coming off of oversold lows right now. The question is whether we'll just get to a lower high and roll back over and continue the trend, or break the trend and start outperforming again to the upside. So that's what this chart tells us here. And so right now it's just a pullback, right? We're just coming down to, even if it's just a down into this area, down to 154. If I were to throw on the 50-day simple moving average to kind of give you an idea of what that looks like. So that's where that is. That's a long fall for it to go and still be on a bullish long-term trend after having reversed the trend back over here, a month or two ago. So definitely, I mean, there's a positive, it's a bullish convergence. We haven't had much of a bearish divergence yet. We're flirting with the negative 100 down here. We're flirting with 50. So either we bounce off of this right now, or IWM outperforms for another week or two. And again, not a trend changing outperformance, but just then coming off of, in this case, overbought highs, but oversold lows for IWM on a relative basis. Let's take a look at like the dollar. The dollar was really hitting some significant support against the euro. It's multiple, like if you look at multiple very significant Fibonacci retracement levels. So here is the big long one here, that dotted line. This 23% line is that big long one. The orange line is this market sentiment rally that peaked over here. We've been consolidating ever since. There's the last intermediate leg of that market rally. That's the black retracement levels. So you can see we've, all three of those lines are sitting right in this area. So very significant support that we held last time here that it looks like we might be holding again, especially with, as of right now, remains to be seen by the end of the week, but as of right now, a oversold cluster on the weekly chart might lead us up towards some resistance before potentially rolling back or staying down in this oversold area. You can kind of see where we might, if we break to this level, where we might go. There's the 50% retracement of the market sentiment run sitting right with the 100% retracement of the last intermediate leg. So back to that low point, you can see what it looks like here. So that's the last low point into this area. So it'd be about 116 and a quarter. But I believe that we're kind of forming a divergent low point here. We'll probably end up coming back up at least into this resistance, if not up into this 119.70 area on any new leg of risk appetite on outperformance in these small cap sectors, kind of coming off again of an oversold relative level for small cap, for risk in general. And you can see that too in TLT have been so bullish, but we're pulling back right now. So we hit the 62% retracement of this bullish run. We're still just retracing, so we haven't really broken through the 78% retracement level, but I don't think we will. I think we'll get up into that area, and that's probably about where we'll end up stalling. That 23% line in this area is probably will end up stalling by the time it's all said and done. But as of right now, if I were to throw on the current Fibonacci lines, I think we have an opportunity for long-term bonds to pull back down. We've already broken the 23% retracement, so probably down into this 38% level, 144 to 145. You'll get some pretty strong support in that area on any, again, short-term risk appetite. As small cap stocks outperform. I expect gold. Look how oversold it was. When it gets this strongly oversold, you're going to get a bounce back up, and it's not necessarily that risk. This isn't a risk appetite trade either. It's just more of the dollar is overbought, it's overextended. Gold is very oversold. So watch for technical bounces in those areas just to recover. Same thing with Bitcoin, right? Bitcoin is very overbought right now on a short-term basis. So look for it to just pull back a little bit. You can see, the MACD is pretty high. We've hit hit the highest histogram. Looks like the MACD itself is going to be peaking here, just to kind of give you an idea of how high that is, because these numbers are so crazy bullish. But there's where we're at right now at 10% between actually this is here, that's the 1040. Let me change this to the 8 and 17 to mimic the MACD. So this is a normalized MACD, so we're still almost 7%. Some of these other bullish levels, when we went parabolic there, we had gotten up to twice that much, and then again about 10% there. But normally, you can see in the past, this 7% level is a kind of a key level in terms of strength. It's just you get these good runs, and it doesn't necessarily mean we have to go down, but it just means that we consolidate for a little bit, and we get a little bit of a bullish convergence, and that's kind of what I expect. I expect the MACD to be peaking here, and we'll get a little bit of a bullish divergence as this is a reflection eventually of risk aversion, at least speculative risk aversion, because this isn't even like risk taking from an equity standpoint. This is even more speculative than that, since they are different audiences, different consumers or different traders that are trading this asset class versus, say, different sector rotations within the S&P 500. All right, now let's take a look at our trade idea for today. And this is a stock that's looking like a nice little bullish breakout itself, a UNP, Union Pacific Railroad. You can see a nice little bullish move. The starting dark green shading and a green line. We've had this before. We'll take a look see if there's any differences here. Big move on the momentum line, the near-term line, getting into bullish territory. It hasn't been able to for a while. Some nice little bullish break there. If you take a look at its 3 green arrows, you'll see we have 3 green arrows and more volume today onto this move than what we had seen previously. It's leading to a divergence on the MACD. You can see the MACD crossing above 0, now really pulling away. So we look for that to peak here, so get a bullish momentum move to break out. You'll notice that the RSI and the CCI also show nice bullish breakout moves above 60, above 200 on the CCI. You look at the directional movement index, and you can see that we are breaking out well above 25, almost to 30, but it was so low, so that's why it's hard to get above 30 there. And we were actually below 20 for a good chunk of this time. We had been, look at all those filled in red candles. That's why the positive was so low, and why the negative, look at the negative indicator, is really, really low on this breakout. So in fact, the ADX got to extreme low, suggesting that we were going to have a breakout type move, and this might actually be the breakout type move. Here's the long-term chart. So again, you can kind of see what it would look like if we did get a breakout move. Look, the peaks that we've seen previously for UNP is kind of up in this double-digit area, so it would be a run back up to double digits. if we were going to do that. So there is some potential. You can also see that in the trend strength indicator. We haven't even started a week bearish trend yet. Well, but when we were doing our class, we hadn't started a week bullish trend, but now we kind of finished higher at the highs of the day. The market outlook live, excuse me, not my class. But we got above 1, got above 50. So now we have a weak bullish trend. So now the idea is that will convert into getting above 65, getting above 2, and then above 5 and above 80, and getting, transitioning from a period of noise to a good bullish trending move. So we'll see if that ends up being the case. If that is, then we'll take advantage with a long call option. We'll come out to October, so give it some time. We actually do have an iron condor on it in September, so this allows us to kind of offset the thetas, one being the longer term option here having positive theta or negative theta, but the shorter term trade has positive. So if it does grind for a little bit, if it does kind of give back some of these gains and retrace down to that 8-day moving average, or even the 17, then, and if it takes some time to get going, that's okay. The iron condor will work out and kind of offset what we might be losing in time decay here on this trade. But if it does continue to break out, then we can keep our losses minimal on the condor and open up the potential reward on a longer time frame if it does indeed break into a new strong trend. You can see the stop order being 50% stop order. So going for a couple contracts, so half my normal position size, because it is a directional trade. Directional trades are lower probability in nature. So if there's more likelihood I'm going to lose money on this, I'm going to cap how much I lose to half of what I'm normally willing to lose on a trade. So we just do a couple contracts with a 50% stop order. You can see the stop order. Basically, we'd have to get back below the 30-day moving average for me to get stopped out. So I like that. So as long as we continue this breakout, and we'll see over the next few days if it does. If this climbs above 60, eventually gets above 80, then we have an opportunity for a really good run, a directional move to come out of this. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. Let's go to our Market Outlook forums, which are free for everybody at our website. Open up any new threads there. Reply to others' threads. Let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, as well as follow us on Twitter and Facebook. Hit that thumbs up icon. Like us. Like the Market Outlook video too on social media, and comment on the video. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.